So, hello, and a massive hello to everybody. Hope everybody's having a great day. No trade calls, no recommendations or responsible loan stuff. We're here for educational purpose only. So, what's going on? Let's see. So, again, if anybody has any questions, don't hesitate to ask. If not, I'll just go through what I think are the most interesting things here going on. And if there are questions, as long as there's questions, I'll keep on going on. Okay. So, ES, first things first. So what's happening? Well, basically our base case here is, first of all, ES is being very, very technical. It's just moving very, very nicely. So I think nobody can really complain here. Now, broadly speaking, if we go on the weekly chart, you can see that we're kind of stuck here, right? And there are two big zones we've been discussing for a long time. So the first zone we've been discussing is the 3,800 3,700 to the downside, and to the upside is the 4,200 into the 4,100 zone, right? So these are really key pivotal zones and key barriers. And we would expect that unless something drastic happens, something really, really significant, the market should hold inside that until we get, a big change from the Fed, big data point, big catalyst, something. Okay, so we wouldn't be surprised to see a lot of wheeling and dealing here. Now, what does that mean? That means that it remains a range trade as long as we're stuck inside this broader area, right? And you want to play the range. However, if we start getting daily close or weekly close above the 4,200, base case assumption would be that you have to continue to try and play the long side for a squeeze back into all-time highs. Equally, if we get a day close or a weekly close below this broader range, you would expect us to very quickly try and flush and get extremely ugly and potentially go back into the 3,000. So outside of that, you'd expect the move to be fairly explosive, and you would want to, in brackets, chase Momo or go with a flow. You wouldn't want to fight flows. Whereas as long as we're stuck inside this range, then the base case assumption is fade the extremes for a move back inside that range. Now, what's interesting to the upside here is that not only everybody will be looking at this descending trend line here, but you've got the confluence of, the 100-week, the 50-week, that's the 200-day coming in here. And here you have the 200-week to the downside. So fairly strong walls containing this, okay? Now, right now, as we came into this week, what were we saying? We said you'd expect to see some kind of consolidation here around the 4,000. Stranger things have happened than them trying to pin this at the 4,000 into OPEX on Friday. But if you look at it in terms of seasonals and what's going on, we're going into a fairly strong seasonal pattern. Here, if you look at the November seasonal pattern, the way it tends to work is it kind of goes like this, then you get a little bit of a dip, right? Just in the week ahead of Thanksgiving, which usually you'd be looking to buy, and then into Thanksgiving and through Thanksgiving, we rip higher, right? And that can kind of start the end of year, Christmas, Santa rally, whatever you want to call it. So right now we're pretty much here, okay? So what you would expect here is that any dip into the 3,900 is probably going to get bought. And as long as we can find a base here, then this should try and resume the move higher. I think this is a very kind of tactical zone where there's not an awful lot of edge, and you have to be extremely nimble, right? So what that means is on the first test, move back into the 200, look for fades back to the 3,900. As long as we hold into the 3,900, look for longs maybe to try and retest this zone higher. Now, the levels that everybody are going to be watching, again, the bears are going to be watching this descending trend line, confluence with, so number one, the descending trend line, two, confluence with the 200 DMA, and number three, confluence with this big resistance zone, which is the 4,200, 4,100. And this is an extremely, extremely important zone, remember, for the bears to hold, because if not, base case assumption is that, especially if you're looking at the seasonals going into the end of the year, never underestimate how stupid moves can be in the thinning liquidity into the end of the year. Above that, this is likely, bar any crazy headline, that's likely the course of action. So here it's really, really important. Now, what are the bulls going to be looking at? Well, clearly this whole downside structure here needs to hold. But if you look at it shorter term, the market's being fairly technical. So you've got this move. And again, we talked about this. We had some very nice longs off these lows into an pre-OPEX low. But look at this. So you've got A to B, markets rallying, back into C, the 50 back, D extends into the 23 extension, which is also the 200 DMA capping. Beautiful, beautiful little move here if you're following the fibs. So what would the natural new thing to look at here? Well, either it moves an extension and it's coming back down here, it holds the 0 and it goes right back into, look at how this lines up, the 5061 into that 4200, or you could also move your fib to look at the new move, one that the 23 is being tagged, and you can see that the 50 back comes in line with this 3800. So a lot of confluence here around these numbers. And it's a very interesting zone. So I think to come back to that, what would the bulls be looking at here? Really, the bulls need this to hold the 3,800. So the way I'm looking at this is bulls need to hold the 3,800. And again, the bears need to hold this upside. Inside here, what I would say, as always, is do not be confused by velocity of move inside range. I don't care if these kind of 200 plus point moves happen in half a second, 10 minutes, or 3 days. Broadly speaking, it remains, for me, right? It remains a tactical zone, and I'm not going to draw any kind of conclusion on the higher time frames or on the bigger picture as long as we're stuck inside that range. And that's what I would be focused on in terms of ES. Broadly speaking, if you see the situation again, you'd expect YM, Russell to outperform ES and NASDAQ. And again, it's all a binary trade, right, on the Fed and on data, right? Are the Fed going to continue to say, as the price is lower, rates higher? Are they going to continue to be hawkish, or are they going to slow down a little bit, right? Is the data going to be coming in hot, or is it going to be cooling off a little bit? You know, every single data point is just a tactical trade. Hot, sell stocks, sell bonds, in line or weaker, buy stocks, buy bonds, right? It's just a very binary trade also with the headlines. So we'll have to see what happens there, okay? So that's basically the ES. Okay, now what is another key catalyst here? Well, actually, before we look at that, something that a lot of people will be focusing on is gold. I'd like to just highlight the fact that gold, we're starting to move towards, as we start to move towards December, gold has very interesting seasonals and very strong seasonals December into January, February. So a lot of people, the classic thing everybody will start talking about and everybody will be looking at is trying to be positioned long gold for the December, January, Feb, right? Usually a good buy tends to be on any pullback into the December FOMC meeting. That's something to look at. I mean, we'll have to see. But right here, what we discussed, I can't remember if we talked about this in the last update or not, but the base case here is that we're stuck inside this broader chop area on gold, and that you do not want to hold any kind of long exposure below the low end of this range, which you can call it 1680s, 1700, whatever you want to call it, right? But also with this confluence of the 200 week, any hold back above here tactically is a long for a rip back into the 1800. And this is played out quite nicely. Now here, what you can see, like similar picture across the board, you've got all these charts that are stuck inside the 200 week and the 100 and the 50 week. And this is a big chop zone, and you would expect them to stay stuck inside the zone as long as we don't get a big catalyst or a big shift or a big headline. And for gold, to talk about again, because these are monthlies, just to give you guys a bigger picture, is again, any kind of pressure below this low end of the range, you'd have to think this could easily flush back into 1550. Okay. But that should be I don't think that should be a base case assumption, but that would be an extremely interesting level to look for possible build longs into that seasonality. But here, again, as long as we're inside this zone, much to do about nothing. It's just chop to wait for the bigger catalyst, bigger flows to take over. But above that 1800, don't be surprised if you see this trying to rip back into those all-time highs too. Okay. Now, another part of the, I'm going to keep on going because I see there's no questions coming. So I'll just cover the key things and then we'll call it a day. DXY. Now, DXY, what's going on DXY? Now, a lot of people were very bullish DXY. I posted this chart a while ago on Twitter, and a lot of people are saying, "Oh, there you go. It's a bull flag. It's going to break higher." Right? Our base case was very different. Right? Why? Well, as I'd highlighted with the circles, it's not a question. Hey, man, how's it going? It's not a question of. Anyways, we don't like bull flags or bear flags, but here what I'm looking at is market is pressing through an aggressive level. Right? We rip higher, and bam. This is a strong reversal candle at a key level. Okay. Now, I'm not going to go through the whole spiel on the weeklies, on the monthlies, but look what's happened after that. Basically, the market is coming back down and it's making a series of lower highs and lower lows. So to me, this is indicating that there's downside pressure and that it wants to break lower. And on a break lower of this level, we talked about the only level you should be really focused on is the 200 day. And we got this break lower. And now the big question is, has the dollar peaked or not? Now, as everybody's going to be very focused on trying to make a call on dollar peak or not, I would be more focused on trying to make money trading this, right? And to me, I don't know if the dollar's peaked. Could have peaked, sure. Could have not peaked, yeah, whatever. Here, the bottom line is that as long as this holds, right, this could easily rally all the way back up into the 50-week, into this descending trend line and still hold a broader move down. Okay. So once again, these moving averages capping to the upside, this to the downside, do not be surprised by velocity of move inside this range. Even if you're bearish dollar, it would make sense to see a little bit of a rally here back into this key level. And then if it's going to get sold off, it gets sold from there. But keep in mind, as long as we hover inside this area, and it's a very similar dynamic across the board, it's just chop. It's just a trading range. Above break of this level, then you can get bullish chase Momo for a rip higher. Below, you can get bearish for a little bit of a flush. But right here, it's just a little bit funky little action. Hey, Tiago, how's it going? Yeah, this is a key level across the board. We've been talking about this and it's very similar action. You can see here on the weekly, this can easily come down a lot more and still hold a bullish rotation higher. Okay, so as you can see, this area which is shaded on the daily chart, which is the 103, 101, it's an extremely interesting zone if you look back on the weekly, right? Why? Because this is the 50 back of this move off these highs. Hey, thanks. The 50 back of this move here, right? So again, this could still be holding a bullish rotation, strong dollar breaks the world, etc., etc. We're not in the business of trying to make these big calls, right? Don't need to sell any newsletter. Here, we're just trying to look at what can happen in the next days, the next weeks. And here, clearly, on any rally back, remember I talked about it on the daily, that this could just be a little bit of a rip to then come back down, right? So look at it on the weekly. That's the key area, right? And this could easily do this to come back down here. And even if it comes back into the 103, 101, it doesn't mean it's the end of the world. That could just be setting up for a much stronger bullish rotation from a lower level. You've still got all these moving averages coming in below. This is the 50 back. So to me, the Do I have a chat room? We have the daily webinars, right? We talk about this stuff on the daily webinars. So to me, the key levels on the dollar now are this 109 breakdown zone, and then afterwards, this 103, 101. Now, clearly, of course, there's a lot of interim interesting levels, but since I do these webinars once a month, these live webinars once a month, I don't want to give you tight levels that then don't, I was looking at the bigger picture. So that's what you'll be focusing on. So here, as I said, there's a lot of chop inside this area, but really what happens up here or what happens down here is far more important than what is playing around in here. Hey Nan, how's it going? Thank you so much for the comment. So that's what's the dollar, and essentially this dollar move is stalling here at a very interesting level, because you can see, again, it's the same chart across the board. Most often, it's always the same trade across the board. What does that mean? Is reversal on yen, it's come back down, right? Beautiful little trade here. This is a chart I've been posting for a while. This was a beautiful little long when everybody was bearish. We talked about 105, 95, with the parity mark being the pivotal level in the middle, right? Day reversal, long, stop below those lows, looking for a trend reversal all the way back into the 200 DMA. That trade is done, but you see how this held, bam, through the pivotal level, and it's corrected back in there, right? Cable, everybody calling for parity, bam, back into the 200. No real trade for me there. Here you had reversals on Aussie. Beautiful little reversal on Kiwi. You see how it was hovering here, taking out weak longs. Then you got the flush with the reversal, long, stop below the lows, back into the 200 DMA. So you see, it's the same. We had a big reversal on dollar Canada too. Here you go. This chart I posted on Twitter again, reversal, so it's the same trade across the board. So the big question here is, has this dollar correction run its course, or does it still have to move a little bit? And that's what we have to wait and see. But really, the big catalyst is probably now in terms, we've got Mester, Bullard speaking today, but the real next big data point is an NFP. But unless we get something from the big data points or from the Fed, likely we're going to see a lot of chop as you've got thinning liquidity into the end of the year. Stuff gets funky, right? Stocks market always has a positive drift, and that positive drift tends to be accentuated as the liquidity is taken out of the market. So what you would expect here, as I mentioned to some of the daily webinar guys, going into this week, is you'd expect chop, and bar any big headline, you would expect, the seasonal flows and the OPEX flows to steer this, okay? So that's where we are. What else haven't we talked about, which a lot of people will be talking about? Oh, here, bonds, right? So basically, another very, very nice chart, very nice action here. You could see what's happening on the bonds, right? So basically, we came in and we talked about this key pivotal level, so ZN's around the 111. And as much as you want it to be short, we trade this very aggressively to the short side. This was a little bit of a gift, this whole failure at that level, is you have to realize that irrespective of what the narrative is or what you think is going to happen or what should happen, price is always king, right? So here we printed this low and, higher low. This is a big pivotal level. We came back above. It's very hard to stay short here. So what you're seeing is people are slowly starting to realize that you're seeing more and more covering. So right now, even though, does it make sense to see the 10-year here at 375, 370? Some people are going to say no. Sure, but short market's going to do what the market's going to do. So what I would be really focused on here is if we continue to squeeze higher, right? Oops, not what I wanted to do. If we continue to squeeze higher, how do we behave around the 114 mark, right? This is a very, very big turn zone we had in the past, right? That's a very, very big. And I would take advantage of any kind of OPEX flows, seasonal flows that jack this up, or basically, shorts covering that jack this up into the 114 to look for new possible shorts there on failures there. That's a very, very interesting level. But right now, as long as we're kind of stuck inside here in the 50-day, this is a very, very choppy area where you can get a lot of messiness. So for those of you who are long, you'll be easily riding long as long as we don't break back below this breakout zone, and you can see the 50-day is protecting here. And anybody who's looking for shorts, I would suspect that the nicer short where you can trade it with tighter RR is either here or on a break back below. So around 114 or 112s, because as I said, don't underestimate how stupid things can be. So that's what I would be looking at in terms of ZNs, and that's what I would be looking at in terms of bonds. What haven't we looked at? We haven't looked at everybody wants to know what's going on in Bitcoin. What's going on in Bitcoin? Well, basically, not an awful lot. Now, our base case, irrespective of the news or whatever's going on, is that basically we talked about, in terms of the classical Bitcoin cycles, we're looking for cyclical top Q4 2021. We got that. And on that top, we said usually you'd expect to see an 80% correction. And that's on the cards, and that's something you want to be focused on. Now, the headlines contributed to that, and that big 80% retracement is around the 11K zone. So here, as we're hovering, technically, I think a really important zone is this 14,735 to 10,450. And if anything, this is an area which should start to draw in buyers or should draw interest. So I think here we could see some sideways chop, a little bit of puke, but as long as this holds, then this is an interesting place for it to slowly stabilize and possibly build higher. Day closes, weekly closes, or flushes below the 10. I mean, I have no idea, but this looks it looks extremely ugly. It looks like it could print 5,000. Yeah, I think it could have from there if it trades below there. As long as this holds, then it could be constructive for, at the very least, a little bit of sideways action and stalling a little bit of this hemorrhage we've seen so far. Okay, so I think we've covered all the major asset classes, gave everybody a little bit of an outlook of what I'm looking at. If anybody has any questions, I'm going to wait a minute. If anybody has any questions, any charts they want to look at, I'm more than happy to look at it as long as there are questions. If there's no questions, then I will wish everybody a great day and catch you guys next month. Apart from the guys I'll see later on today in the webinar. As always, guys, remember, long price action, short bias, manage your risk, don't trade too big. And, the main purpose is to try and book some every day, and even more importantly, protect your capital and make sure you can come back tomorrow. Okay? Do I think markets are likely to erase the CPI spike first? I mean, I wouldn't look at it that way. I don't look at it that way, right? What does that mean is, to me, it's just levels. So if you're talking about the ES, I don't know. Leo, did you catch the beginning of the webinar? Or did you just join? Because at the beginning of the webinar, we talked about all the levels on ES and how to look at it there. SP, okay, here, I'll send you the link. Yeah, I'll post the recording as soon as this is over on the blog, and it'll be available on YouTube. And we talked about all the levels on ES. But rather than looking at it in terms of those spikes, just focus on the broader levels. The broader levels will guide and will be are what are interesting. Okay. But again, listen. You can go back on the recording. It's going to be available straight away. And if it's not clear, just tweet me. Just tweet me, and I'll get back to you on Twitter. Okay. Wishing everybody an awesome day ahead, guys. All the best. Talk to you guys soon. Thanks for the guys who asked questions. Thanks for the guys who said hi. And talk to you guys soon. All the best. Take care. Bye-bye.